Good morning, everyone. Welcome to panel 5 of the symposium on cooperative financial institutions in rural development, promise and challenges. This is the panel that deals with CFIs, cooperative financial institutions, and agricultural finance, a very crucial component of the symposium. So welcome, everyone. My name is Carlos Cuevas. I'm a senior consultant at the World Bank. And my main role today is to introduce the moderator. In just a minute, I'll be happy to do that. Then I'll have some input into the discussion. So let me just go over some of the practical things first. Make sure you can hear the event properly. And if you cannot, go to audio settings and choose your preferred audio output. Interpretation, English, French, Spanish is enabled for this event. So please select either English, French, or Spanish using the interpretation icon on the bottom right-hand side of your screen. If you don't need interpretation because you will understand all the speakers, and you just keep it as off. I think that's the default. To pose a question to panelists, select the Q&A icon, which is right next to the interpretation icon at the bottom of the screen. Any comments you want to share, use the chat, which is kind of in the middle of the screen at the bottom. Participants will have microphones and videos off for the duration of the event. Once the event concludes, just select the leave button to exit. And we have just one closing session left tomorrow that you can register for. And note that this session is being recorded, and recordings will be made available after the symposium on the website that's listed above, cfi-internationalsymposium.org. So with that, let me have the pleasure of introducing David Herbrands. I hope I pronounced the G correctly. Dear colleague and friend, to moderate the session, and I'll be around later on. Thanks. David, over to you.
Thank you, Carlos, and a warm welcome to everyone from the Netherlands. I'm, as you can see, in my house, as is normal these days. We would have flown to Washington otherwise for these type of seminars, but it's good to have such a good crowd here today, focused on cooperative financial institutions and what we at Rabobank perceive as a very normal link, which is agricultural finance. So today we're going to discuss a little bit the challenges and the opportunities we see for cooperative financial institutions in this area. And I'm very pleased that I can introduce some very knowledgeable panelists to you in a minute. But first I'd like to give a little bit of a background to the topic and provide a little flavor of how Rabobank is related to this topic. So if we could go to the next slide. So Rabobank, as most of you know, is by nature a cooperative bank. Over time, we have changed our governance model considerably based on the European regulations. We had to go back to a sort of one-tier organization, but the DNA is still very much cooperative, and that's translated, I think, in our mission, growing a better world together. Those are big words, but the gist of this is that growing refers to our food and agri link, a better world to the mission and the purpose of our organization. And the word together is actually describing the fact that we don't think we can do this alone. We can't change the world alone. So it's on the one hand a very big mission. On the other side, we're humble enough to say together to make this work. I'm personally part of Rabo Partnerships, which is a separate entity within Rabobank, focused on impact and returns. So we do a lot of advisory and a lot of investing in emerging economies. And we work a lot with cooperative financial institutions because we believe they can make a difference. And that's also the reason why we have partnered with the World Bank to have more focus on this topic, and gracefully supported by the Dutch government to do so. So let's go to the next slide and see some of the background of today's mission. Yeah, next slide, please. So here we have a very high level, because I'm not going to lecture here, but I just wanted to show you a very high level, interesting set of numbers, which basically show you the gap in agricultural finance worldwide. So the blue dots is the percentage, the credit to agriculture as a percentage of GDP. And then the brown or black is the value added to GDP, and the orange or yellow is the number of people employed there. Now, the message here, I'm not going to go through all the numbers, but if you look at a very mature economy, being the Northern American economies, then you can see that credit to agriculture is more or less equal to the contribution to GDP and the employment in agriculture. So a very mature economy would sort of balance these things out. And then on the other side of the equation, when you look, for instance, at Africa, which is, of course, always the example to give the other side of the equation often, there you see that credit to agriculture is way lower than the contribution to GDP, and that's even a fraction of the employment in agriculture. So we can see there's work to be done in emerging economies, and at the same time, you could perceive this as there's not that much work to be done in our own economies, like in the Netherlands, for instance. So for Rabobank as an organization, we proudly look back at a century of banking in the Netherlands, of financing food and agriculture in the Netherlands on cooperative basis. But we can also conclude that the new challenges are not so much access to finance as it is themes like sustainability or maybe even downscaling agriculture. But that's very different in other economies. And that financing gap we see in other economies is the topic of today. And the question is, how can the cooperative financial institutions contribute to closing this gap? So let's go to the next slide. So then the question is, what's holding CFIs back, assuming that they are in the rural areas, of course. So it's a matter of scope and skill we identified in our background notes. Their focus on serving specific customer segments, there are sometimes dilemmas to choose between being a social animal or driver for economic growth based on business principles, which sometimes leads to very closed-off systems focused on the lower end of the market, which doesn't allow them to grow with their best members. And that also stops them from bringing value chain financing concepts to market. And I think that's a very important and crucial item, because if you can't finance agriculture as a value chain activity, and you're only focused on the primary production side and finance the smaller farmers, for instance, it might be difficult to bear the risk and have a good banking business case there. So scope is an important topic to look at. And on the other hand, there's skill. In terms of the volume they can access, the access to funding to finance farmers, for instance, and also skill in terms of the capability to grow in terms of the technology that can be deployed through banks. So scope and skill as assumed topics to look at when discussing what's holding CFIs back to deliver on their promise to the agriculture sector. So moving on to the next slide, please. So how to make it work? And here we're going to discuss today some examples from I guess Latin America, Africa, Southeast Asia, and so on. But maybe also to look at the Rabobank case here. So digitization is something that's on everybody's mind here. We, as Rabobank, organize many seminars where we invite talents from all over the world, and we ask them, what's on your mind as a bank or as a cooperative And you can for sure count on the answer being digitization. Everybody's looking at digital solutions as the solution to solve proximity, to solve efficiency, to solve for risk assessment based on data. And Rabobank is no different from that. So we are investing heavily in terms of our innovations in the wholesale and rural space, looking both at the largest producers, the largest farmers in this world, for instance, in North America or Brazil or Australia, as well as smallholder farmers in Kenya or Nigeria or other countries. And at the same time, also looking at digitization from an ecosystem or value chain perspective, whereby, for instance, the traceability of goods could be a new tool to manage trade commodity finance worldwide. I'm just naming these examples. It's not complete, but just to show that at Rabobank level, we're in a very similar spot than some of the cooperative financial institutions we talk to, sometimes at a different scale or the numbers are different, but the philosophy and the strategies are often overlapping. And I think it's fair to say that who gets this right and organizes it properly, either within their organization or through smart partnerships, might be sort of the next generation of successful financial institutions. So a lot of energy going into digitization, a lot of energy also going into the fact that digital and reaching out to new segments could also play an important role in terms of invoking impact and making value chains deliver to more people in emerging economies. And then secondly, the environmental sustainability is of course something that especially Rabobank, being a large food and agri bank and is very much exposed and looked at as an important stakeholder in the food and agri chains. So people are also pushing us. What are you doing in terms of environmental policies? How does it work out in the Netherlands? We're very proud of our production methods in the Netherlands because we think it's very efficient in terms of CO2 emissions and so on. At the same time, within the context of the Netherlands itself, we do need a transformation because the Netherlands is quite full. We have too much nitrogen and those type of issues. And people look at a bank like Rabobank to play a leading role there as well. And I think that fits a cooperative, to be honest. And then, of course, the stakeholder support and collaboration, which means that no proper strategy in agriculture can be done without stakeholder management or alignment, and I would say also not without public sector involvement. So that's more or less the background. A lot of issues we could discuss. So I'm very happy to, I'll maybe go to the next slide, yeah. So I'm very happy to introduce the main panelists. For those who signed up, I first have to excuse Mr. Chintala from NABARD. He sends his apologies. He couldn't make it. We had him on the announcement, but unfortunately he was unable to join today due to important meetings within the bank that came up suddenly. And unfortunately, we only got that message this afternoon, so we didn't replace Mr. Chintala, but I do get the opportunity to poke a few questions towards Mr. Carlos Cuevas. And given his knowledge of the sector, I'm happy that he's around to give a bit of background from the public perspective as well. But let me, without further ado, introduce the panelists, and we're very pleased and honored that they're here. First of all, Gerardo Almaguer. I hope I pronounced it correctly, Gerardo. He's the President and Chief Executive Officer at Desjardins, Développement International Desjardins, since early January 2019, so 2 years on the job. And a very nice moment to start, I would say, with the pandemic as your first management item. He's an engineer by trade, but also a businessman, long-standing career with DID for 15 years already. Did a lot of work in Panama and Colombia and various other assignments. So we're speaking here with someone who has mud on his shoes, which is always great to have the two perspectives, the CEO and the actual work on the ground, and has extensive knowledge on financial cooperative. So it's a pleasure to have you here. I'll also introduce our other panelists before I dive into a couple of questions. That's Mr. Daniel Hubba. whom I know quite well. We work a lot together with Mastercard, and Daniel Hubba is one of our main counterparts. And it's a pleasure to have you here today, Daniel. So he's the market development lead for Eastern and Southern Africa, has a long-standing career in banking, in the financial sector, but on SME banking, but also on the more practical side of agriculture, I think with TechnoServe, if I say that correctly, Daniel, and in the mobile telecommunications sector. Yeah, I know firsthand that Daniel has a very interesting vision on digital and agriculture as a mix for the future. And I'm very pleased to welcome him today on the panel. So welcome, Daniel. So the way the organization is today, we have a couple of topics: the why and the how. We focus a bit on digitization, and we focus a bit on making it work. I'm also mindful of the fact that, given the fact that it's that we only have two panelists today, we might not need the full 90 minutes, but let's see how it works. And it also allows us to give a bit more time for questions from the audience. So my colleagues Ruby and Björn will look into the questions and either immediately give you smart answers, or they will push it towards the panel, and we will try to give you some answers there. So without further ado, let's focus on the why and how. And Gerardo, if I may ask you the first question, and please also elaborate a little bit on DID. We decided not to have huge slide packs explaining our organizations, but if you can say a few words on DID, and I understand there's technical assistance and investments, maybe you can link that to the question at hand here: why CFIs are so important in agricultural finance, but at the same time, why is it still difficult for them to deliver on this?
Bueno, buenos días. Muchas gracias, David.
Good morning. Thank you, Daniel. In principle, I would like to thank you for inviting me to this panel. I am the president and CEO of Desjardins International, which is a component of the Desjardins organization, which is the biggest cooperative organization in North America. It was created about 50 years ago to share the values and principles of cooperativism in Latin America. And this group is the main agricultural financer in Quebec, among other things. We talk about the challenges of cooperatives, and what I would like to say is that in our experience in DID with the cooperative movement, the first thing we understood is that there was a main element, which was that we could not just focus on working with the CFIs. We had to make sure that all the actors in the ecosystem would be supported as well in order to adapt the evolution of the financial cooperatives with the evolution of the ecosystem. So in that regard, we started to work several years ago with cooperatives to strengthen their procedures, their products, their focus, in order to provide better and more abundant services to the farmers and producers. But we also have to take into account that there are other actors in that ecosystem. And that is also very important, because otherwise we would not be able to make headway and to close the gap between the functions of the cooperatives vis-a-vis the challenges of the agricultural sector. So the first lesson is it's not enough to develop the capabilities of the cooperatives, because cooperatives or the financial system is only a means, a necessary element in the agricultural field, but it's not enough. From the viewpoint of cooperatives, I have to point out several elements, and we have been working in different countries with different levels of maturity in these sectors, but they do represent a series of very common challenges. And the first challenge, and I think you gave us some pointers in your introduction, is that we need to make sure that we have a methodology and a specialized focus adapted to the needs of the agricultural sector. We cannot serve this sector, which has very particular characteristics and risks, with a series of standard methodologies. The deep knowledge of the dynamics of the agricultural sector is fundamental if you want to develop a series of answers in order to tackle the real needs of the sector. Another fundamental issue from our viewpoint is that a financial cooperative must be regarded as another member of the value chain and not as an external element. That is fundamental. It implies that the cooperative has to be more proactive. It has to be permanently in touch with all actors in the value chain. It has to know what is happening with each of these players in the value chain in order to provide answers. We cannot, as financial institutions, play a passive role, hoping that everything else will be fixed and that they will only come to us when they need capital. Cooperatives are a necessary actor. It's not enough, but we are necessary in the value chain. So we must be in contact with our customers. And I'm talking not only about our customers, but also other actors, such as research centers. We have to understand what is happening there, the new trends that are being developed, the dynamics of those who provide inputs, the producer associations, the challenges in terms of infrastructure, the challenges for the smallholder. And we have to leverage the force of the cooperative movement, the force of the proximity we have to the rural areas. In many cases, cooperatives are the only financial institution in those regions. How can we leverage that advantage? By looking at them as another player, another actor, and not as a mere spectator. And that is a very important element that will allow cooperatives to understand that they must play a more active role, much more active, and they must listen to the needs of the sector so that we can provide answers that are adapted to their needs and not sit in our offices and think about solutions that we think the agricultural sector needs if we haven't been in touch with the agriculture sector permanently, starting with the smallholders. The Jandan is the main financer of the agricultural sector, and its involvement in the entire ecosystem is basic. We need to be in touch with all players, all actors, and this allows us to evolve in a parallel way with the sector. And we need to make sure that the evolution of the entire ecosystem goes hand in hand. We cannot believe that cooperatives will evolve faster and the ecosystem will be left at another level.
Thanks, Gerardo. That's well understood. The cooperative as a spider in the web, almost. It raises questions also about the financial viability. They have to do so much work for their members and have to solve so many of these issues to connect players in the value chain. And yeah, I totally agree with your perspective, but it also raises these type of questions. I'm very much taken by the fact that you approach it from an ecosystem perspective, and that I'd like to use that as a bridge to our friends from Mastercard who are in the room, because they are not usually invited to talk about cooperative financial institutions and agricultural finance, being the credit card providers and transaction specialists of this world. But still, Daniel, here you are, and I know you're very, very much focused on providing services in the agricultural space. So maybe you can explain a little bit what Mastercard's take is on this world, why you think it's important to move in this direction, and maybe also to add directly this perspective of the cooperative financial institution as a spider in the web of the ecosystem, as Gerardo just explained.
Yeah, thanks very much, David. And really, it's a pleasure to be here once again. My name is Daniel Hubba. I lead our Mastercard development work in Eastern Southern Africa for a division that is called Strategic Growth. Now, Mastercard really is a payment technology company. And the more we focus on payment and digitizing flows of payment across multiple financial institutions globally, we've always realized that there's a majority of the transaction that remain cash in the world. And we see that that for us is a challenge that needs to be resolved. Now, that is very closely linked to our mission, and where we said as a business, we want to continue doing well by doing good. And to be able to really bring that to bear, Mastercard has committed to be able to bring about 1 billion people and 50 million micro and small enterprises to the digital economy by 2025. And we want to do that by also focusing at about 25 million women entrepreneurs. Now, to get to this billion people who today are just a percentage of the financially and digitally excluded people. And we believe very strongly that digitization and our muscle as Mastercard in the payment space can then be leveraged from an experience perspective in bringing more people and more communities into the inclusion space, not just financial inclusion space, but the digital inclusion space. Now, one of the things we've learned as a critical lesson as we roll out that and look at the billions of people who are today not accessing services, who are today not accessing financial services specifically, is the fact that a majority of these populations are in areas that are predominantly rural. And if you take just two continents as an example, Africa and Asia, you have over 1 billion of them that are living really at what we call the base of the pyramid, and today are not adequately served because they are not visible to the ecosystem. Now, in doing this particular focus, what's important to also further note is the fact that a majority of these individuals depend on agriculture for not just for their livelihood, but also as a source of income. So there are actual transactions that are happening in the agriculture space today that are not digitized, that are not seen by the other ecosystem actors. We believe very strongly as Mastercard that technology, and a robust technology for that matter, can bring visibility to the last mile into the operations that are happening in the majority of the rural communities where many of these individual farmers are living today. Now, the lesson we've learned very critically is that reaching out to these farmers individually is a challenge. And that is why the cooperative movement as an actor in this space plays a critical role for us. That how can we be able to leverage the cooperative movement both at the production level, where farmers are organizing themselves to be able to produce and to be able to access market, but up the value chain to also talk about member organizations, which are cooperatives that are playing in the financial spaces as basically cooperative financial institutions, who today are challenged by the very nature of manual operation, the very nature of invisibility, and the inability to attract capital injection at scale. So this is what excites us as Mastercard, where we are saying we can be able to provide a technology that can then be able to open the lead around what is digitization at last mile, targeted at the BOP population or the base of the pyramid, to be able to help these individuals to be uniquely identified, to be able to link these individuals to market, to be able to provide a tool and a measure by which the individual's transactions can be captured digitally and make it available for financial institutions to de-risk the cost of reaching these individuals when they're offering their financial services. So that is for us what is exciting. And lastly, maybe as an exciting point for us also is the fact that these cooperative movements have the actual relationship and reach to the last mile, many of which we can leverage as ecosystem players if we are to successfully serve these individuals at last mile.
Thanks, Daniel. So welcome to the club then, focusing on agri-finance from a Mastercard perspective. And I agree with you that that leveraging technology is crucial for the CFIs also to reach out to the members. And you almost turn it around. Hey, you as a large fintech, you could say you leverage on the organization level that cooperatives bring to you to be able to reach out to those farmers, which is an interesting perspective, I think. It raises a couple of questions again. One is we've seen from our advisory work that it's much easier to organize transactions in rural areas than it is to organize lending to rural areas. And I think that's really where the nitty-gritty comes in, where the advisory comes in, and where the linkage, as Gerardo described, to all the value chain players organized by the co-op comes in. And that's whether it's inputs or the access to the markets. That's of course the role the co-ops play. And then as technology kicks in and as transactions are easily accessible, and even some lending is becoming easier, especially in a country like Kenya, where M-Shwari, for instance, is accessible for everyone. Everyone can get a small loan. It also raises questions in relation to the public side of affairs, so the regulatory side of CFIs, and how that should be safeguarded to really leverage on those institutions. So Carlos, I wanted to ask you to maybe reflect on that topic shortly as well.
Thank you, David. I was writing notes here talking about the regulatory points that you wanted me to cover, and so it is connected with what Daniel was just referring to, because it has to do with, I guess, this difference between large scale or mid-sized farmers and small scale smallholders. That there's quite a diversity there in terms of access to some of to begin with, the infrastructure that's associated with the technology and the ability to use that. And that's kind of a comment I could make on in that respect. And I wanted to also bring up, since I guess you wanted me to talk about regulatory issues, is the almost a favorite topic of mine, is the question of movable property as collateral. And that's what I was getting ready to talk about, because it is connected with the kinds of contracts that farmers can engage in. And to me, it partially explains that discrepancy you showed in your map, this slide, between agricultural credit versus contribution to GDP. And part of the discrepancy, in my view, in many people's view, is the fact that movable property is not a valid collateral in many countries, and has all kinds of requirements that make farmers unable to access credit with that kind of guarantee. And to me, that's on the regulatory side, that's a critical factor. And there's all kinds of studies done about that, but basically just defining what is the valid interest is one item. Registration, meaning that you can register the claim in a valid, publicly accessible registry, and then enforcement. Those are the three main components. And just defining the interest. And we used to have the example of kind of the difference between the value of a cow in Nebraska, United States, compared to the value of a cow, let's say, in Paraguay or in Kisumu, Kenya. is that there is a market value, of course, the cows can be sold as the food, but the one in Nebraska can be used as collateral because the legal environment allows that, and that's not the case in many countries in the world. And I guess I used to work in TA down in Chile in my early professional years, and the cow was branded and tagged, and that was the collateral. If that cow wasn't there, well, you couldn't enforce your loan contract because the cow has gone down the cliff, and that's part of the regulatory environment that rules that kind of transaction. And that's, to me, one major reform that one would like to see enacted in many countries. The other example I'm sure you're all familiar with is the warehouse receipts system. It requires a framework that defines what a valid warehouse is and what can be licensed as a warehouse. But then the banking law needs to allow for changes in provisioning and loan classification that makes a warehouse receipt a valid collateral. Otherwise, it's just a warehouse. It doesn't add to agricultural finance. So that's what I wanted to point out. In addition to what we all know about general issues on access to formal finance for people in rural areas, was the proof of residence of a farmer in Ethiopia. And they live on the road, and that's there's no ID card, and that kind of thing is generic for all kinds of financial transactions, but particularly for agricultural credit. I just want to go back to the moral property aspect that makes a big difference, even within a country, in terms of the existence of registries and also on the enforcement. Sometimes the courts are so logged up with cases that you cannot enforce the contract even if it's been defaulted. And so the rules have to be adjusted to make it easier to manage that kind of a contract. I know Gerardo is going to talk more about value chains, but there's also kind of a checklist there on what kind of contracting, commercial codes, and so forth that are important to have in place for, as he put it, for CFIs to be part of the web, as David said. Thank you.
Thanks, Carlos. That again evokes a couple of questions, and I'm going to pass them on to Gerardo, if that's okay. So we're both, Gerardo, we're both from institutions that are strong believers in what cooperatives can generate in terms of value. And I think the point that Carlos raised there, the sort of the moral collateral rather than the formal business banking, which is based on easier stuff, but this sort of moral collateral, knowing your member, the proximity to the member. How can you give some examples of within DID's work of how you can translate that? And I'm going to use a question from the audience here as well to fine-tune that. How you can translate that into mitigating credit risk and organizing these small loans to the sector at an acceptable risk level, of course, because we're not talking about the social impact alone here. So if you could use some examples there, or maybe explain better how this moral collateral could replace the actual registry that Carlos also referred to. A difficult question, I know.
No. Gracias, Daniel.
Thank you so much, David. In fact, it is a very interesting question, which helps us understand that an essential element all of the actors in the farming ecosystem need to look at is how to mitigate risk. I believe the focus in some sectors, in some countries, has been mistaken they've seen how they can transfer risk, thinking of who'd be willing to accept that risk because we consider the risk to be high. Instead of thinking of all the actors, not just from the perspective of the financial institution, all actors, public and private actors, try to mitigate risk. There are no movable or immovable property collaterals that can guarantee the success of that farmer. Nothing is going to offset lack of access to a market. So we need to ensure that all of the actors are aware of the risks in the sector and how to mitigate those risks. Financial institutions and cooperatives are part of the chain value, the value chain. And this is what we have seen. The stronger the structure in the ecosystem in this value chain, risks will be mitigated. There will also be external risks too. This is why we have harvest insurance and we have collaterals, but that is the later element in case what we're doing first doesn't work out. But the essential thing is to focus on the fact that farmers will have the necessary inputs, the necessary techniques, everything to be able to have a successful production, and that the farmer will have access to the market at fair prices, not just so that they will be able to repay that loan, but also for his household economy and to meet other financial obligations. In the last few years, we've worked in several countries, and I'd like to mention a program we had with Laval University in Quebec, with Burkina Faso. We provided small loans to farmers in the Nieve value chain in Burkina Faso, working in the north and the south, structuring all the inputs so as to increase the productivity of the soil, making it more resilient to excess or lack of water. We worked with taking into account even the inputs and then the work at the level of the cooperative so that the supplier of inputs would be able to provide those inputs at the right date because that farmer would have the loan and a technician would be there to help the farmer to provide advice on how to use those inputs the farmer had received. Also, everyone would be aware that there would be work done so as to ensure the marketing of the product. So we worked throughout the whole flow. We worked with the input supplier, the Farmers Association. We are talking of loans that are about 300 Canadian dollars, that is about 250 US dollars. We did this in 3 different seasons. There was no collateral. We had no collateral requirement. The agricultural innovation worked really well. There was excess water, but still they had higher productivity. And all of these farmers, and the impact was even higher on women, I must say, they were able to repay 100% of the credits. So we did not focus on the collateral, but we focused on how to ensure that the full value chain will be covered. It seems simple, but it is very complex. It is important to respect the timing of each step of the process and who articulates that value chain to ensure this coordination. This is an element that sometimes will be undertaken by those managing the financial aspect. Sometimes it will be the Farmers Association, but this is essential. Something essential to manage risk is to understand deeply the sector. In Colombia, in Mali, We work with the stakeholders in the sector to know in detail the production costs of each of the farming activities in each region of the country. This information today in Colombia is public information, information that belongs to the Colombian government and which allow it to know how much it costs to produce coffee, 1 hectare of potatoes in a certain region. This allows them to understand their real financing needs. This is also valuable for the financial institutions, for cooperatives, so that they do not have to speculate and think, do they need $10,000 or $1,000? Does this have to do with what one person believes? No, we have sound information from the farmer and the rest of the stakeholders. Then we can provide amounts that are more appropriate to the real needs. This is the first element to mitigate risk. This took us 4 or 5 years in Colombia and in Mali, but I believe it has borne fruit. This is information that is used today, not only at the financial sector, but also for the decision-making process for public policy. And going back to Carlos' comment, yes, we need to have a regulatory framework that will facilitate all of those things. Movable or immovable property, collateral, for example, but there is a part that within the sector, all of the ecosystem actors need to work in a coordinated fashion. And here I include cooperatives.
Thanks, Gerardo. Maybe as a follow-up question, in those implementation to make it scalable, did you also look at the organization level of these cooperatives and, for instance, a federal or a network level on top of it? And that's also a question that Juan Bugena is asking. And then maybe to push it one step further, isn't it so that you also need that level of organization to connect de-risking tools on a more wholesale level to these type of projects, or do you look at that differently?
Bueno, entramos en un elemento fundamental.
Well, this is a fundamental issue, and let me explain that the Jardin, as a cooperative movement in Canada, is a federated network. It's integrated 100%, and it's one of the elements that gives force to the movement. It's clear that cooperatives in the rural areas, in their area of influence, can achieve several things. But from our model, in our experience, we are convinced that a confederation, a union of cooperatives allows us to reach economies of scale, a better focus, and more customized responses. When we talk about digital transformations, I was listening to Daniel on this matter. He said that the cooperatives were a very good means to reach the bottom of the pyramid. I am convinced about that, but cooperatives must have the necessary elements to play that role. And it's a very difficult thing to do, but it can be served through a consolidation of the cooperative movement in a much stronger way, taking into account that digital elements, technology elements are fundamental. And you said that from your opening statement. It's something that will be present for many years, but cooperatives can add a lot of value to institutions such as Mastercard. They can not only be a vehicle for the introduction of these technology elements, but they can also be a vector for the education in the use of these technologies. And this is fundamental because cooperatives are created not only to ease access to financing, but they also have an economic and social role, which is much larger. So this educational issue is a value added, which complements all the other technological elements to be introduced.
Yeah, very clear, and I'd like to use that perspective also to bring Daniel into the discussion, because Gerardo says that these cooperatives bring value to Mastercard, to bank on, and if you walk around in Rabobank, you often hear that data is the new gold, and it might be so that we're on a crossroads, at least that's my opinion, on a crossroads whereby it's important to see whether these cooperatives can bank on the oil, or whether others will take the data and run with it. And I think that's a topic that's very close to Mastercard as well. Maybe you can reflect on that, Daniel.
Yeah, thanks, David. And I think let me just take one step back and contribute to what Gerardo and Carlos just talked about. And the fact that, the complexity of agriculture brings the need for us to focus on consolidation, as Gerardo talked about. And for me, the goal here is that there are multiple value chain actors within the value chain itself, whether you're talking about the input marketplace, where you have the input provider and manufacturers, whether you're talking about the guys who are providing advisory services to farmers, either directly or through their cooperatives, whether we are talking about off-takers who are both domestic and offshore, or whether we are talking about financial institutions, either those that are corp-led or pure financial institutions that want to lend into this sector, or whether we are talking about various service providers. In our view as Mastercard, what has been the missing link is the lack of a shared infrastructure, digital infrastructure, that can be leveraged by all these multiple players to bring projects like what Garcia is talking about to life. That we are able to provide a 360 view of the various activities happening across the agriculture value chain. Now, building that interoperable infrastructure requires that we have some fundamentals. Fundamental number one is it needs to be an interoperable infrastructure that therefore builds in trust and attracts trust actually from the various value chain actors that these particular digital structure will be able to support all of us and not just one party, so that we move away from a siloed approach of digitization to a shared approach of digitization. So that's number one fundamental. Number two fundamental point is the reality that agriculture is predominantly in areas that are less connected from our real world. So most of the agriculture transactions are happening in rural areas. It is therefore important and incumbent upon us to deliver a technology that can work offline and support offline-based transactions. So that is a fundamental point. The third fundamental point is the fact that we then need to make sure we are designing this digital agenda or platform in a manner that respects the privacy of the farmer and the various individuals. And Mastercard takes this very seriously, that if we build with a privacy by design principle, that our platform is built to ensure that consent is managed, data is taken care of, necessary rights are availed, explanation and education is provided, then we shall remove slowly the tension that exists today of who owns the data. Is it my data? Which is making people push to their corners and not willing to share data because we have not educated people enough, because we have not built our platform with that particular kind of principle. And that is the change and the driver that we want to provide. And lastly to that is really safety and security. Now, what we are doing from a Mastercard perspective is take the peace of mind that we've provided in the payment ecosystem today to switch transactions globally and provide the same peace of mind from a principal perspective to the individual farmers, the various actors and service providers in the agriculture space, so that they have a peace of mind that the data being generated out of the various transactions, one, it is secure, two, it is reliable. Now, to be able to really bring this to bear, I want to give two examples. Now, from a Mastercard perspective, the platform we've built is called Community Pass that captures the tenets I talked about. And one of the fundamental things that came through, and Carlos, you gave an example of that, is that the big worry for financial institution is one, the proof of reference for the farmer. That if we are going to move away from collateralized lending into non-collateralized lending, we must actually know that the farmer who says is a farmer is an actual farmer, and they actually where they are. We are also clear that not all farmers today have a formal government identity. There are many different identity regimes across the world. Many of them are not actually reaching out to the farmers. What we have done is to provide a digital identity capability, which is a functional identity. It doesn't replace the government identity, but provides a unique way in which a farmer, once onboarded, can then be able to enjoy services across multiple service providers in the value chain. So providing that functional identity that is reusable across the value chain by multiple actors who want to serve the farmer is a critical layer of starting the journey to de-risk lending to the sector. The other point that is there is to then say, if these farmers are actually in predominantly rural and offline areas, can we provide a capability that they can be able to receive value when they're in offline environment and standardize that capability and offer it across multiple sectors? And that is, again, what we're providing. The third one is to then say, look, how do you service this smallholder farmer in where they are? Can we standardize the devices that are being used to service them so that not every particular organization or party that is working with the farmers have to invest in the infrastructure afresh? So if we do that well, we are able to then de-risk service at the farmer level. Now, to the point of the cooperative movement, the fact that they are at different level of maturity, I think one beautiful thing that technology and digitization does is to professionalize how these cooperatives are actually operating today. So that for you as a financial institution, when a cooperative says that they actually have 10,000 farmers in Kenya, you are able to verify that those farmers exist. And that is what really, from a technology perspective, are the opportunities we are providing. Now, in our partnership with Rabobank, we've launched an alliance we call Agriculture Exchange that says, how do you bring the power of digital, the things that I've just talked about, link that to the power of credit from a scoring perspective that goes beyond the transaction data to other forms of alternative data. That digitization plus credit scoring that is enhanced provides an additional comfort to those financial institutions to then look at this sector as a lendable sector. And for me, that is where we start seeing the train moving, looking at how then can we deploy to some of the value chains that, hitherto financial institutions didn't consider, like maize in Kenya that we're going into, and moving away from not just the structured value chain to other value chains that where the farmers are. So for me, it starts there, that if we create that standardization in the ag sector, we will then attract multiple players, not to invest in the infrastructure, but to leverage the infrastructure we're building for them to specialize in the services they want to offer to the sector. Thank you.
Thanks, Daniel. Yeah, that makes it very concrete. That you can smell the transformation coming towards these cooperative financial institutions. And I'd like to use that momentum to first ask you, Gerardo, but also you, Carlos, afterwards. How, because we as Rabobank, like Daniel's hinting at, we participate in such a view. We believe that digital can enable the sector to blossom and to even have cooperatives blossom. At the same time, and that's my personal perspective, it also means you're shaking up some vested interests, and that might also be a risk for cooperatives. And then going back to your message, Gerardo, that might be a risk then to go back to the models where you really do hand-holding of the farmer or organize these value chains out of the cooperative. And that then links back to the first comment I made, that it's usually too expensive to do so. So it seems to me that the whole world is looking at digital as an opportunity that brings new organization of value chains or ecosystems, a lot of it for the good, but do you also see a risk for the cooperatives there? And I'm asking Gerardo first, and then maybe Carlos, for you to also reflect on what maybe risk mitigants could be if we perceive this as a risk.
Bueno, primero lo que digo es que efectivamente.
Yes, first of all, what I would like to say is that technologies could be an accelerator of the ecosystem, but this does imply certain risks, and Daniel has explained them very well. The first mitigation element should be that the cooperative developed a clear strategy for digital transformation. Why? And how does that digital transformation help in its mission and its goals? Because alternatives in the market are now many and very different. And if we don't have a clear final objective as a cooperative, in order to evaluate how this digital transformation will contribute to accelerate or to reach that goal, we risk investing economic resources and time and risk certain elements due to information and opening certain gaps that can be negative for us. So a fundamental issue for a cooperative is to establish clearly how and what are the transformation elements in the digital area that will add value to its institutional objectives.
And also the way in which this is coordinated with the other agents in the ecosystem. When Daniel talks about this cross-cutting platform, this is being done in producer associations so as to be able to track production, to know where the products come from, who grew what. This is information that can be essential as an element, an input for the decision-making processes of a cooperative. How to use this in an intelligent fashion. And I repeat, in such a way that it will help the institutional goals we have set forth.
Carlos, yes, please.
David, yeah, I guess just wanted to add, and going back to kind of some of the basics, that the first response to risk is diversification, and farmers do that, and financial institutions also do that. And to Juan's questions earlier about how do we deal with that in small rural cooperatives, Gerardo already pointed out, well, integration and networking is one response, and digitization of that kind of relationship sure helps, because it is important to be able to do that on a low cost basis. So that that's one element of dealing with risk. And connected with that, we argue that CFIs have an advantage in terms of information about their customers, because they're community-based, their proximity, the members have to join. It's not that you do a campaign to do credit. Members have joined because someone knows them and sponsors them to join the basic cooperative, and that gives the organization an information advantage that other financial intermediaries don't have. So to me, that's something that, again, the informatization, let's put it that way, of all that kind of relationship, it's really useful, and it reduces the cost of dealing with your members and your customers, but also helps them connect the basic unit to networks of different kinds, second tier, third tier, that would then go into diversifying the basic risk, which has to do with the production of certain agricultural commodities. You don't want to have a cooperative that's only coffee. Well, you have cooperatives that are only coffee growers, but then if coffee goes down, then you're in trouble. So the point is, how do you connect that with other cooperatives that do something else, and you have kind of a diversified basis in the aggregate. And to me, that's a really important element. And again, making information available and easy to gather, it's really a factor, and I think digitization plays a big role there. Thank you.
Thanks, Carlos. I think you're also leading us to the difference between data and information there, which is, of course, relevant. And maybe to also look at the questions that come in the chat, and a very obvious and important question, I think, one that's always been on our mind if we were advising cooperatives. And it's also part of the partnership we have with the World Bank, which is the vision that usually cooperative financial institutions are too small to be able to keep up with the other financial sector players in terms of investing in their fixed apparatus, their IT backbone, basically. So that was also something we referred to in the beginning. How can CFIs, small as they are, or maybe organized in federal or other systems, how can they overcome this problem of being so close to their members and at the same time often too small or sometimes too inefficient to make the much needed investments to keep up with the sector? Maybe Gerardo first, and maybe Daniel, if you have thoughts on that, I'll give you the floor as well, of course.
Bueno, sí, para nosotros yo diría,
For us, the answer is obvious. It has to do with integration. Being part of a group, a generation of cooperatives, which will help offset with all of the cooperatives that are members. You can offset the individual weaknesses. I believe a small cooperative can satisfy the needs of its own community, but that has its limits. And we want to be able to accompany the evolution and growth of our member farmers. So we need to be able to offer them a whole range of services based on the level of maturity they have. We need to take advantage of our proximity. This is what we do with Desjardins. We have cooperatives, many of them in rural areas. They know the client, but because they are part of the movement as a whole, they can offer the whole range of financial services the institution can provide simply because of being part. And these risk mitigations through diversification that Carlos was mentioning happens there. Maybe a loan from a small cooperative in a rural sector might be very important because of the size of its assets, but when you dilute that amongst the many assets of the group as a whole, we know we have a greater capability to satisfy those needs and manage those risks.
Maybe Daniel, from your perspective, it makes sense what Gerardo says. If you divide the cost with a larger group, then that's a solution as well. Maybe from your perspective as a service provider.
Correct. And I think I just want to give two examples. So if you take an example of Kenya, where you have a bank like Cooperative Bank that is a membership bank by various cooperatives, if you may, the trend that I see here, and I'm seeing it across the region, is the fact that you have banks like Cooperative Bank that are considered the banks of last resort, if you may, to the cooperative movement, where the CFIs then really count on a larger financial institution to provide them capital for on-one lending to members. One way to really help those that are small in size is to be able to diversify the types of services they're offering. Increasingly, because of the infrastructure they've built at last mile, how do we make them attractive to the large, big financial players in the financial market to leverage their network on the ground to deliver financial services? The only way we'll then make them relevant is we must graduate and grow the CFIs, not just to be seen as a pass-through, but to be seen as entities that are actually efficient in dealing with smallholder farmers, so that it becomes an efficient channel of, let's say, service delivery to the smallholder farmers. So if we aggregate services at the cooperative level by the CFI, then we will make them attractive to the large players to use them as channel of delivering financial service and expand their capacity and therefore capability to serve. Diversification of those products, in my view, is one way of doing it. The other way of doing it, and that's what Gerardo is saying, is consolidation that will then need to happen, in my personal view, at some point, that we increasingly are going to see consolidation happening even sector-wise. If you look at the transport industry, for example, which is closer to the agriculture, where you have a couple of SACCOs in Africa, you already see a bit of that consolidation happening from a SACCO perspective in terms of them coming together and either forming federations to be able to manage a larger base. So I think those are the trends we'll continue to see. But again, I must emphasize the fact that repositioning the CFIs by leveraging their capacity on last mile to do more, and doing that by embracing technology could be one way that will increase their value prop to the financial market system actors.
Thank you. Yeah, I think very clear, and I see a nodding from the other panelists as well. I would like to, Gerardo, maybe for you, there's a question from the audience about insurance and data exchange with insurers, and at the same time, how to protect farmers falling into potential algorithm trap. It's a very rich question, which basically relates to data and risk, I guess, whether it's from an insurance perspective or from a credit decision-making process, something that Rabobank is also looking into as a potential service that could provide skill and scope to CFIs. But maybe Gerardo, do you have some thoughts on this in terms of the data used for risk mitigation?
Sí, en realidad, bueno, Carlos lo decía.
Yes, in fact, and Carlos was saying this, cooperatives can be an essential source of data and information given their proximity. And as Daniel was saying, they need to ensure that the data will be appropriately and securely handled, respecting the confidentiality of the different actors. But there are elements that can be shared with third parties in an aggregated fashion for a better decision-making process. How to ensure that the farmers are not part of this algorithm simply? This is a great question. Well, this is one of the big advantages of the cooperative model. As Carlos was saying, proximity. We will have a digital transformation. We will increasingly use technology, but this proximity, this presence of the cooperative movement within its communities will always be part of the equation. And this is an advantage vis-a-vis fintech and other institutions and other financial institutions. If you think of fintech, you have everything through technology. You don't see the human element there. With Desjardins, many of the transactions have to do with digital channels, but it is clear that there are fundamental elements such as the human contact and the relationships amongst human beings. We have these as cooperatives. It is up to us to ensure that technologies and digital transformation will be a means and not an end in themselves. We need to remain close to them to help them use these tools properly, taking advantage of this great advantage that the cooperative model offers us and the opportunity of being so close to our members.
Thanks, Gerardo. That's a rich answer to a rich question. We're 13 past the hour. I've made so many notes that it's going to be impossible to sort of get a red line across, but I'll try anyway. And then I'll end with a short question to all the panelists. And then I'd like to ask you whether you are optimistic regarding the future of CFIs and their role in new digital realities. And I think that relates much to the topics we discussed in this panel. There's million other questions we could look at. One of the interesting factors is the trust factor. It's mentioned sometimes in the sense of collateral, but also Gerardo, like you mentioned, the human connection that's still important, the proximity to customers, and then Daniel more from a digital perspective. Almost wanting to leverage on that trust factor between these type of organizations and their members, and I think that's a call to action to all of us to make sure that we manage this very fragile system properly, because we can all see the benefits of the CFIs. At the same time, we in our day-to-day lives also see the difficulties they face and sometimes harsh realities they operate in. And the other perspective I wanted to bring in is this notion of the CFIs actually holding quite an interesting power position, I would almost say, in future developments, as they are the ones that connect to these farmers, and they are the only ones, it seems, that take the trouble or invest enough to be so close to these small economic actors, if I may call them like that, and others won't go there. So it's not just that they are sort of a last resort, but it's also they hold quite some power in terms of what the future will look like if we look at smallholder farmers, especially, as an important factor of agricultural production. And that power position also holds towards the ecosystem at large. From a Rabobank perspective, we often speak to large food and agri companies, and they are very keen on understanding the upstream problems, understanding the alignment between the production level and their own sort of wholesale incentives, which are often aligned. I mean, everybody wants a stable and well-functioning value chain, but in practice, it's still difficult to bring those worlds together. And I think even in this perspective, cooperatives, whether it's cooperative financial institutions or cooperatives in the broader sense, can play a very important role. So I'd like to thank you all for the very insightful topics. I'm not doing you justice with a couple of these points, but I wanted to add, and I'll start with you, Gerardo, then go to Daniel, and then to Carlos, to maybe in a few sentences give your opinion on whether you're optimistic about the role of CFIs or whether they will go under in this digital change.
Bueno, yo diría que soy más que optimista.
Well, I would say that I am more than optimistic. I think that what we have lived in the last few months in the COVID pandemic has shown that it's very important to have a cooperative model. And this should give us a lot of hope, because I think we can play that role. And I think we can be optimistic when we see that cooperatives in many regions, and that is the case in Quebec, are leaders in the social and economic arena. They can have an important role in economic activity, and this will lead us forward. But it won't be easy. We will have to take difficult decisions sometimes. Daniel was talking about consolidation, and these are decisions that should be made, investments that must be made as well. And I think that not all will reach the end line, the goal. But when I see the focus of the cooperative sector, I am optimistic. When we see that Desjardins reached 230 cooperatives through consolidation, we don't have as many units, but we are stronger as a sector, and this allows us to provide a better response. So I am optimistic, but the road ahead is not easy. We will need to make difficult decisions, and my plea would be to go forward and think about our customers and partners as the ultimate beneficiary and make decisions on that basis. I think that can make that easier for all of us.
Thank you, Gerardo. Daniel.
Yeah, thank you very much. And I join Gerardo with the same view and saying that from a Mastercard perspective, we are very optimistic about really where the future holds. And that is being demonstrated by what we are seeing across regions. So if you look at, for example, in India, in Southern Asia, for example, for example, today, through the digital agenda, working through the cooperative movement and professionalizing those cooperatives, we've reached close to 185 cooperatives and growing over 100,000 farmers. If you look at Africa, for example, we've reached close to 500,000 farmers, work with close to 200 cooperatives. Really, the train has left the station, and we see that the more these cooperatives are embracing digital, the more we are bringing various actors together, the more value then we bring to the second layer, where you have those CFIs that start seeing, okay, we can actually work more efficiently with this particular membership we have today. We can get more from them. We can connect more actors. So I think the future is great. And my last comment will be, I don't see a situation where we will completely replace humans with technology. I don't think we'll reach that point. Experience has taught us that we will still need a balance of the two. That we need, for example, digital agents in the ground that have relationship and can be able to build that trust, embedding that with technology to make them more efficient, to reach more farmers better, efficiently, and every time. I think that's what we're doing as an enabler, and looking at it from an ecosystem perspective, we will surely then be able to scale this mountain step by step. Thank you.
Thank you, Daniel. Carlos, your perspective.
Yeah, briefly, I am optimistic, as everyone in the panel appears to be, about the current status and the future of CFIs in general, and in providing more and better financing to agriculture. I think you have mentioned, David, already that the features of CFIs put them in what you call a power position, and that needs to translate into an image of solid as a financial institution that is reinforced by the trust of their members. And then we didn't get to talk about how that then can be translated into access to capital. That was covered in a panel that actually Desjardins organized last week, that at some point becomes a constraint. I think we heard examples of the Peruvian cooperative that's working really well, but then the savings of the members are not sufficient to handle demand for loan, and they managed to get subordinated debt. As these new ways of accessing capital, I think, are going to become more and more important, and Rabo, I'm sure, has a lot of experience on that as well, to break that kind of constraint. At some point, the cooperative is doing great and knows the customers, doesn't have enough money to lend them out. And that becomes then a binding matter. But I think the way the whole sector is moving, even though we cannot define as just one homogeneous entity, is the right way. It's getting into technology and digitization and giving the appearance of solidity or soundness more clearly for accessing resources to continue or to improve their role in ag finance. Thank you. That's
yeah, so thanks all three of you, and also for sharing your optimism. The challenge or the hill we're climbing, and it's a bit of a cliche, but it's really an ecosystem play. All this work that needs to be done really involves lots of stakeholders, lots of perspectives, and it's not just digital, but also the human factor. I think we have a lot of common ground there. Let me thank you all for participating here. I thought it was a very rich discussion, but then again, I'm the moderator, so let the audience decide on whether they enjoyed it. But I'd like to thank all the audience for bearing with us. I hope you've enjoyed, and I hope we've answered some of your questions properly. I think I'm handing over to you, Carlos, to say goodbye on behalf of World Bank, and then thanks all for your attention.
Well, happy to do that. It's been a great discussion, and I appreciate your moderating, David, and your own knowledge contributing to the discussion. And Gerardo and Daniel have provided really interesting angles to the discussion on ag finance and how cooperatives, cooperative financial institutions are indeed a factor in solving that discrepancy that David showed earlier in the presentation. So thanks, everyone. I appreciate the participants. not sure if we were able to get to all the questions, but they are in the record, and we'll encourage you to participate in the closing session tomorrow. Thank you so much, and thank you to our IT support to enable all this interaction as if we were in the same place. Unfortunately, we're not. But so that's my goodbye from the World Bank side.